Pre-construction prices primed to increase again? Yep, we're going there. Stay tuned to this week's episode of Prime Property to see what I mean. Good day, Toronto. Welcome to another episode of Prime Property. So glad you could join us here. October has been a pretty hectic month for me, as predicted. It's definitely a lot busier than it was in September. It's a lot more consistent. Now, that really isn't too much of a surprise because there's a ton of launches that they have to be jammed back in before October ends. And that's kind of what makes October so busy. It's a huge launch of a lot of projects before the winter ends. So with that being said, the reason why I want to make this video for you is almost 2 years ago, I wrote about how pre-construction prices were primed to increase around the spring of 2017. And that was literally titled, Pre-Construction Condo Prices Primed to Increase. And here again, being the bearer of bad news, I'm going to tell you, we're going to look for another increase in pre-construction prices, okay? Now, if you want to read that article where I whipped up my crystal ball to predict the future, I'll put a link in the description below for you. Back then, we were just about to break $1,000 a foot in the entertainment district area, which is the M by V, and now we're easily over $1,300 a foot. They say a picture is worth 1,000 words, so here's a picture. This is a price list I have on the screen right now of the same project, one with the prices of 18 months ago and one in the summer that just passed. The ridiculous thing is, in the summer that passed, projects such as the one that are further from subway stations than this current project at 357 King launched at $1,350 a foot. $1,350 a foot. So it's unfortunate I say this, but we are going to be primed for another increase after this. But let me preface this message by saying that I'm in no way telling you that prices are going to increase at the same rate that they have from the 2 years ago. But what I'm telling you is that I see all the patterns that I saw 18 months ago to show you why I'm saying the prices are going to increase. So first and foremost, one of the patterns I'm seeing right now, as unsexy as it sounds, is the development charges. Years ago, when I wrote about the first why pre-construction costs were primed to increase, the city of Toronto secretly, low-key doubled the development charges overnight in February. Now we're seeing the latter half of the phase-in amounts also come into play. So I wrote about this in about 2017, and you can see over here, this is a chart I'm using right now for the current state of the market. The red arrow is kind of where we are, and anything to the right of that is going to be phased in with the next 15 months. So you can see that we're going to have a cool 30% increase in development charges alone. And guess who's going to be paying for that? It's definitely us as the end users and investors. You got it. Now, another low-key increase are the road closures and how long it takes to put these condos up into the sky. The longer it takes a builder to start breaking the ground and digging, the more cost it adds for them at the end of the day for price per foot to us because they have to carry that property for longer. Secondly, I want to give you an idea of how to reverse engineer what I think prices will be in a given project. But let me preface something for you, and I'll be real with you. All builders I know are for-profit businesses, and they must make money, and that's a fact. However, the notion of a greedy builder, I'll bet some are true and some are not, is there. As another person in business, I'm going to say that there are margins and there are bottom lines. And what I can tell you from all the builders I've spoken to is that the margin for a building is usually about 15%, okay? So you may think that's kind of low, but you have to remember it's 15% on multi-million-dollar projects. So with that out of the way, let me show you how I reverse engineer the pricing on projects. On the screen here, on the left-hand side, you can see a rough estimate that I had in 2018. On the right-hand side, I only increased the development charges by 30%, okay, as per the chart in the above that I put you in the earlier part of the video. And you can see that all those costs are going to be passed down to us as end users and investors. Then when you mix that in with the fact that I conservatively increased the cost of land by 10%, which is more now, and construction costs by 20%, which is more now as per the Altus group, you can see why $1,350 is kind of just the bottom line and also the norm in downtown. Now couple that with the next 30% increase in development charges and probably more land cost increase and construction cost increase and holding cost increase. And you can see why I'm saying pre-construction prices are primed to increase again. Don't forget, this is all increasing before any appreciation has actually happened in the market. This is all just the cost increasing. This is exactly why when someone tells me, where do I think the market can be in the next 5 years? I just tell them, look, man, there is room to grow. I see the writing on the wall. There's room to grow. How much more there's room to grow, we'll see. It really depends on how much the market appreciates. Just remember, we have a supply crisis right now. So with the next election next week and seeing all the campaigns for what people are doing for the housing policies that they proposed, I can definitely see prices going up if they get enacted. So that's why I'm still doubling down on Toronto specifically for the next 10 years. And if this is something that you want to do or you're wanting to invest in or increase your portfolio, make sure to reach out to me. My contacts will be right here. Until next time, guys, happy real estating. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.